What's up, you guys? Before we get into this video, I want to just briefly talk about the name change. So you've probably seen that we changed the name to Power Plays. And to be quite honest, I'm pretty tired of the YouTube bullshit. I love making videos. I love creating content. I love our Discord community. I love all of that. But I hate the YouTubiness, the having to keep your attention and watch these retention rates all of the time and use the same thumbnails and the same all of that. Like, I'm just tired of an audience and I want to build more of a community and like we have, but continue to just make it better and better and not just give you content that's going to be worthless after a couple of days. So I want to focus more on having a calm mind, focus a lot on psychology of trading, talk a lot more about patience as well as risk management. And so over my career, I've talked a lot about power trading. It's something that I don't even know if it's a real thing, but that's what I've done, where it's trading predominantly off of the weekly chart and looking at major momentum moves as opposed to quick little scalps throughout the day or throughout the week. So what we're going to do right now is go through a massive trade that I took on Meta that has made me more money within the past 4 months than I made in the entire year just trading. And I want to explain how I was able to find that trade, why I was able to take advantage of it, and ultimately where do I plan to sell it. Not so that you can hop in this and try to get the rest of it, not like a normal video, but so that you can recreate this for yourself. And what I'm going to do is post this video and then do another video on Shopify showing you another example of how we were able to do this. And from there, start to throw out a couple of trades a week based off of these power plays. But the overarching message that I want you guys to understand is that I want you to think past just what's going to happen in the next couple of days, but more so how you can take trading to a career level. And so let's get into it, and let's start by looking at the weekly chart for Meta. This is a weekly chart for Meta, which means each and every one of these candles represents 1 week's worth of price action. What we're looking at right now is 2019 all the way up to current day, which is now 3/28/2023. And where I ended up getting into my position was somewhere down around $112 to $113. Something that you need to be wary about is going against a major trend. I always hate when I see students or new people who join our community who try to buy a deal just because a stock is trending down or the stock is down massively within that given time frame. The truth of the matter is 9 times out of 10, after a massive fade happens, we will get a strong bounce, which is normally called a dead cat bounce, but normally ends up just having a lower low. And so I knew that after we saw Meta fall significantly back in January of 2022, that I wanted to get in long term, but I didn't want to just get in at any random price. Normally, after a stock gaps in either direction, for a fundamental reason, not based off of news that isn't going to matter long term, but more off of fundamental reasons. In most cases, those major gaps will continue, whether that's to the upside or to the downside. So as we saw Meta continuing to sell off, there were a couple of bounces, but at this point, I did not want to enter because I didn't feel that the state of the market was something that I would want to be buying even up around $220 to $240. I knew fundamentally when looking at Meta that the pivot of the company was probably not going to do well for the stock price, but long-term would do very well for my asset in general. A couple of price levels, that $220 level as we were coming into this support was key. And once we broke that, I knew that there was a very high chance that we were going to try to fall down and test maybe 180. And then from there down to 138. So it was at the point where we were trading around $138 that I decided to myself that I want to look at potentially starting a position. With that being said, as we were going into this $138 level, you can see that we were not slowing up as far as price action is considered. Yes, if you're looking at indicators, you may get a couple of potential bullish signals, especially RSI divergences, which is what I talk about a lot. But ultimately, price action is going to be the most important thing because it's the most real-time indicator that you have. And looking at this 5 SMA, we were using this as a resistance level all the way down into $148. Now, the problem though is that every single week we closed a lower low and drove right through that $138 price level. So for me, even though it's at the price level I want, if I'm watching bearish volume week over week become stronger and stronger, I don't want to buy into that dip, especially seeing that we're going into earnings on this week of Monday, the 24th of October in 2022. I decided that the risk versus reward just simply wasn't there. Luckily, I did not get in and we had a significant drop down to $100. Now, at this moment, I don't want to go starting a position Once again, just because the price is at a super cheap level unless you bake that into a long-term position. When I entered this, I was buying it because fundamentally I like the company, but I was looking more for a massive momentum swing to the upside. So finally, after weeks and weeks and weeks of selling off, we had a significant bounce from 94 up to 108. But the truth of the matter is, we don't really give a shit about that. I'm not one of those people, and you shouldn't be one of those people like, if only I had bought Meta at, whatever this low is, $90.29. Truth of the matter is, if you were buying at $90.29 and it wasn't like a fundamental long-term position, you're just buying because it's at a good price, that's not where you want to buy. You want to wait for the confirmation. So yes, we did have a massive rebound from $90.63, a 24% push up within a week and a half up to $113, but I care more about confirmation. What are we looking at? What would be considered confirmation? Well, the thing that I'm mainly looking for is the fact that we've used this 5 SMA as a resistance level this entire way down. So something that I'm going to want to see is a hold over the 5 and a consolidation period. So after we had this big push up, I'm not going to enter here because we don't know if we're going to hold. We could just reject right on that 5 SMA and bang out a lower low, which is what we don't want. Now, this next week, Monday, 14th November 2022, we consolidated for the entire week. We pushed all the way up to 120, pulled back, but consolidated and closed over the 5. Now, this wouldn't quite be the time to enter because what I want is another confirmation. So the next candle, we're still consolidating that week within this price level. And now this is kind of giving me, honestly, my pivot points that I'm going to be looking for. So if I'm looking to get in this trade, I would be looking to the upside for a break over $113. So a break over 113, which is going to be that top pivot point, I'm going to enter and set a stop loss probably somewhere down at 106. And if you were bearish, you would be looking at potentially entering at 107 and taking profits down at 87. So now that we know why we're entering this position, we need to figure out where do we want to take profits and where could this thing potentially pull back up to. You don't want to be trading within the context of, well, the stock is oversold, we're just going to buy in and hold till whenever. You need to actually have a plan. So if we were to go and take our swing high on the weekly all the way down to our swing low, you will notice that where the Fibonacci retracement level is, the strongest one, aka the golden zone, is all the way up here at $240. Coincidentally enough, $240 aligns with this major resistance level that we had here before, so coincidentally lines up with the 200-day SMA. Remember, we have to pretend that none of this is here. We're just watching these candles that were forming. The way that I was setting this up was I was looking initially to enter on the break above 114, we'll call it 115 to be safe, and set a stop loss on a lower low down here at $104.13. Now, where I was initially looking to take profits was up at $200, which would give me a 74% return for a potential 10% loss, an 8-to-1 risk versus reward, meaning that if I put $10,000 in this, I'll pull $7,500 out, or I'm going to go ahead and just lose $1,000. Now, from this current point, this is not worth entering now, but I'm still in it. We have not broken below this 5 SMA and held under this 5 SMA this entire time. Now, the safe thing would be to start scaling out, potentially taking some profits here, selling half of what I have, and then selling the rest up at 240, 260, or just holding it if I really wanted. But from where we are right now, I do think that we could potentially see Meta in the next couple of months push up to 240. So I'm still currently holding, but I think that right now would probably be the best time to sell. I hope you guys enjoyed this video, and I want to start doing more videos like this that actually explain my psychology behind why I took a trade and specifically how I trade. As I look at my legacy, which I know might sound a little big-headed, I don't want to be known for having a ton of views and by having a big audience. I want to be known by having a very strong, capable, and competent community, which we can help to bring each other up in all facets of life, not just trading. And so that's what I want to do. I want to share that passion with you guys through other channels, which we're going to be doing in a podcast in the future. And I just care more about bringing you guys quality over quantity of content. So thanks for all the support, guys. Hope you have a great day. Check out all of our free resources within our description. Peace.